Hey, what's up guys? Welcome to the Zillionaires Club channel. My name is Thomas and I hope you have all amazing day. In today's video, I want to show you one great tool I'm using for commodity trading, which helps me to make a decision about where the market is heading next. This tool is named COT report. Commodities are traded in many different places. Many of them are located in USA, for example, New York Mercantile Exchange or Chicago Board of Trade or Chicago Mercantile Exchange. This is among many others around the world and many others as well in US. You can see here just in America how many other places are trading commodities. It has a lot of advantages because the price gets standardized over these exchanges, and it as well gives us one very big tool which is called COT report, and which this whole video is about. So COT report, what is it? It's so-called commitments of traders. It's shortcut COT, sometimes with dots between C.O.T. sometimes just COT. This is basically a report which is every week available, which is published by US Commodity Futures Trading Commission. And this is something what helps a lot commodity traders because it gives a lot of internal information about each commodity market, and it helps beside the price levels to orient in the commodities world, and helps a lot to make correct trades. The COT reports are published at the end of the weeks, so Saturday or Friday evenings are available for that concrete week, but they are showing you situation as of Tuesday that week. So these reports showing you basically holdings of major players of the commodity market, and they give you a chance to make much more precise decision about your trade. Here I want to say it's COT report is as close to the holy grail as it could be, and this is no a joke, this is a reality, because not so many other markets give you actually such a detailed view inside of the market, who is holding how many short and long positions, who is holding majority of those positions you are trading. And as you know, it's good to follow the trend. It's good to follow big guys. So if you know that big guys is, for example, going more and more to longs, you can expect that the whole market will go up because longs will push the prices up. So following the big guys, those whales who are trading on the commodity market, is always good. It's not good to be between the small fishes who are eaten by sharks. So COT report, which is created for commodity markets, is really something like a holy grail. You can see here again that the report is published on Friday or Saturday in my case, due to the time difference. It has multiple details levels, and it unfortunately as well has quite old format, which is decades old. I'll show you some example in a second. But don't worry, no need to be scared, no need to be reading these very old style looking tables, because there is already graphical representation available on different platforms. As well, what was very interesting, those of you who are trading a little bit longer, beginning of 2019, there was this issue with the budget approval in USA. And this institution which is publishing this report was one of them impacted, having no budget, and that's why the COT report was not available for a few weeks in the beginning of 2019. So you have to trade based on some other indicators only. The COT has basically four types. It's a legacy report, supplemental, disaggregate, and financial report. I will show you just one of them example. This is the legacy report example. You can see here basically August 6. So this is time when this example was published. There is commercials, non-commercials, and total holdings of concrete commodity, which is in this example wheat. and you can see that there is number of bushels each of these players on the market holding, separated to longs and shorts. Again, I think this is quite complicated. I think this is very difficult to read and especially to make any decisions. What you need basically is to see how big difference comparing to last week, which was July 30, week before August 6, and how big difference changed the hands in the market of wheat, and how many new longs and new shorts were opened and closed since that time. Again, I'm never reading this report in this format. I am relying on other platforms where the format is much more readable. One of those platforms where it's much better readable is the bar chart website. You can come here and you can see here legacy report or the other reports here under commitment of traders, COT. And here you can see basically all the commodity markets, and you can see those changes across those weeks already, and with some colorful representation of ups and downs. And this is already much better readable than the original one. But again, I'm using typically another representation in the chart. And this is basically how it looks on the chart already. So this is TradingView platforms, which I'm mainly using for analytical purposes. And you can see longs and shorts taken from this report on weekly basis. Here, example as a gold. So you can see on weekly chart, basically you can see how many new longs and how many new shorts are created. And you can see that this development of longs and shorts typically at the end pushing the price either direction. I'm not using directly longs and shorts. I go even more further, and I'm using basically COT index. This is an index which is calculated from those numbers you have just seen in the report, and you can see it in the TradingView platform as well. This COT report basically oscillates between 0 and 100, and it's already standardized to my view, and it's also using different number of observation period you calculating this index. I'm typically using these shorter ones, means 13 and 26 weeks observation, and in a second I will show you how it looks at the end on the chart. Another indicators I'm using from COT report beside the COT index is the net positions, and this second indicator is basically taking just large traders and their net positions, means long minus shorts, from this report. Here as it looks in the graph, so you can see here again gold on weekly chart, and you can see the net positions, means longs minus short, here in this green chart below the price chart. And you can see that basically the price chart is copying the net position chart. It means more and more longs, less shorts opened in the market of this concrete gold future. More and more the price tend to go higher. Once the shorts become more and more, means net positions go down, the price as well tend to go down. And here, if you remember nothing else from today's video, is basically how it works all together combined. So basically we have here price chart of soybean meal, so, ticker symbol ZM. And you can see here those two indicators I was just mentioning. It's net position and COT index. If you look at it, they typically oscillate the opposite direction. So once the price go higher, respectively once the net positions go higher, the price go higher, and at the same time the COT index go down. Whenever these two indicators hit some extremes like 0 or 100, the price tend to stop and turn around the opposite direction. The same happening with the net positions. So for your trading, whenever you see net positions reaching the previous high or previous low, for example, like here it happened, or here, you can expect that the price will tend to turn around the other direction till now. COT index, the opposite. Again, once it reached the extreme of one side, you can expect that the price will tend to stop and go the other directions. Obviously, nothing works 100% perfect. There are always situations where it doesn't work. There are always situations where it takes some time. Like for example, here you can see the COT index reached the extreme already in the beginning of September 2016, but the price was still continuing down, basically for the remaining part of 2016 and even in the beginning of 2017. This is something what happening quite frequently, and so it means you cannot use it as a solely one indicator which tells you now is the time to jump in long trade, but you have to wait as well for the net positions to stabilize or turn around, and you have to as well analyze the other indicators from the market, the other fundamentals, and so on. But as a very basic indicators, it's definitely something what helps a lot to make correct decision. This is natural gas graph. You can see NG ticker symbol, and basically because of very cold weather in US, the price was very significantly growing in November and December 2018. Even the net positions were basically already going down or stable, not going up so much, but the price was still sharply growing. So this is the moment when if you trade solely based on net positions, you would make big loss. You can as well remember there was a hedge fund which was blown completely on natural gas last year, and probably this was one of the reasons, because they didn't manage their risk accordingly, and they might be listening only one indicator. So this is not a good idea. You should always look at the situation overall and not use only one indicator as a holy grail. Coming back to the situation when it worked to the end, I think COT report is definitely very helpful tool which should have very high place in your decision process of which trade to take, and you can use it on weekly basis for finalizing your trading decision and for your analysis of commodities. I hope this video was useful for you, and I hope COT index and net positions will be very favorite indicators for your commodity trading. Those of you who are not subscribed yet, please hit the subscribe button, give me thumbs up, and see you next week on the similar video like this. Bye.